Liu Li-Gang is ANZ's head of Greater China Economics Research, and he joins us now. Liu Li-Gang, thank you very much indeed for joining as well. What was your read-through from these numbers?
Good morning. Indeed, the number is below market expectation, but if you look at the categories in terms of output, it still remains quite solid at 52. However, in terms of export orders, we do see a slowdown there. Meanwhile, import prices also fell quite strongly, suggesting that the imported inflation in China going forward will diminish. This will leave room for policy ease, and we see partial ease already underway.
So this, one could argue, is Wen Jiabao's policy is actually working to some extent, as they try to, I guess, fine-tune the economy.
Indeed, the current policy measures are mainly structural ones aiming to reduce business costs and also the burden of taxation of small and medium enterprises. However, we have not seen any outright monetary policy easing, and we expect that some kind of partial monetary policy easing by cutting reserve requirement ratio on small and medium banks to encourage more lending to SMEs.
So with that in mind, we can talk a little bit about the small and medium-sized enterprises that you were talking about. Now, they're the ones which have been suffering more, haven't they, because of this lack of liquidity in the system and the reluctance of banks to lend to them?
Indeed, SMEs in China are burdened by two fronts. One is the very tight monetary policy. The other is the slower external global demand. Most of SMEs tend to operate in China's exporting sector, and that, as a result, they were suffering more from the current market turbulence and the lack of confidence in the global economy.
Okay, let's just talk a little bit about also your forecast. Does this affect your forecast for growth in China? I believe that you've actually penciled in a figure of about 9.5%.
Indeed, we think that with some policy easing underway, and also the fact that the business cycle in China's fourth quarter tend to be upbeat. In general, local government tend to spend more of the budget in the last quarter, then we tend to see quite a rebound in the Chinese economy the last quarter. In addition, we have seen external environment have become better, and with a stronger than expected U.S. Q3 GDP figure, and also the financial turbulence originated from the Europe region, and will start to become more stable. All these will steer a more stable growth in China in the last quarter this year.
Right, with the mention of Wen Jiabao and indeed Hu Jintao, and what do you make of the statements and the noises coming out regarding the European debt crisis right now? We've had President Hu talk about, well, Europe's ability to fix the crisis on their own, but Europeans, well, they seem to think that China must come to the rescue in some way.
Well, I think China's participation in Euro debt resolution process is also in its own interest, because China still sends around more than 20% of its export to the Euro region, and also this offers an opportunity for China to quickly diversify its foreign exchange reserve. And all this suggests that to participate in Euro rescue is also in the interest of China.
Liu Li-Gang, thank you so much for joining us in ANZ's Greater China Economist.